Money Morning Live. Welcome to Power Profit Trades, the quantum trading special, part 1 of 3. Hope you guys enjoy today's show. We have some great stuff to talk about here with Tom Gentile. Let's bring him in 5, 4, 3, 2.
All right, Eric, you're absolutely right. This week's live stream, we're going to show everyone how I trade the trend. We're going to talk about rules-based trading. We got scans, we got trades, we got everything. We're going to be really chunking this down, very much like we did with our volatility strategy. We're going to take a first pass today. I'm going to show you a couple of dozen trades that we're going to be pushing through the ringer. And so, but I really want to show you the foundations of how we build this strategy, folks. We got a lot coming up here, the Monday, Tuesday, Wednesday for both of you. Whether you're on Monday Morning Live or YouTube, you're getting all of this information live. So check it all out. Get a notepad. Get ready. I'm going to teach you my best trend trading system. So, Eric, how's the weekend before we get started?
The weekend was good, Tom. I was actually away on vacation. It was my little short vacation. Went up to Connecticut with the family. It was beautiful. How was yours?
Oh, good. We had the whole family over for the new Game of Thrones prequel going on. Something with dragons.
Yeah, of remember. Always.
Anyway, let's get past the dragons. Let's get into trend trading and more recently what we call quantum scripts right now. So quantum scripts is a software that I use to help navigate the market and look for trends. And right now it's really hard to find the trend. I mean, take a look at what happened on Friday. Big moves down. I mean, obviously, if you've got an idea that the market is heading down, then you are right with quantum scripts. Now, we did have stocks up on Thursday, but even on Thursday, we got 24 bearish signals from our quantum software. And again, this is 24 signals that we then start to crunch down and work our way down to what we call the best of the best. That was ahead of Friday's sell-off. We had 27 bearish signals on Friday. That was the same day, Eric, that we took our 11th win in a row from our QDP algorithmic-based trading strategy. So I want to show everybody real quick before we get started all the emails that we sent out to our members recently. Can you pull that up?
I sure can, Tom. And here, why don't I just kind of take everyone through them really briefly. Here's what's going on with our PDF trade. That was on the 26th. Time to take profit on our APA spread on the 24th. Bank your lightning. Fast APA profits on the 23rd. Set up your exit on these two positions on the 22nd. We have our TDOC spread just hit first profit targets on the 22nd. Here's another mega trade for you on the 22nd. Let's choose a bearish position on Myrna on the 22nd. Was a busy day. One more profit to take on the 19th, and we've hit our first profit target on 2 trades. I'll tell you what, Tom, I would love it if this is what my inbox looked like. It means I'm making money every single time one of those notifications comes.
And I'm not showing this to everybody to gloat. That's not what I'm doing. I'm showing you this because the crazier this market gets, the better this particular strategy works. So what is this strategy? And what is it telling us? And by the way, Eric, just before we got on the stream today, for those that are QDP members, we have an open position right now that hit a single, a double, a triple, and it's at a quadruple right now. So we're moving our profit stop up. So we were at the grand slam on one of our signals. So for those of you that are not making money while the markets are tanking, then check out my research service, Quantum Data Profits. All right. Links are on the screen. And you can also call Gabe on the number below for what we like to call our bear market pricing. So let's go ahead and get to it. I'm going to switch screens here real quick. Again, we talked about this being a 3-part series. So today, it's all about understanding the directional trading strategy. We're going to look at trends, indicators, and we're going to look at today's scan. Before we're done, I'm going to show you the scan of everything that's going on. By the way, most of it is bearish. Got a couple bull opportunities, but I'm telling you, the majority of the market is turning to the bear side. I actually did it last week, and we got ahead of that curve. Tomorrow, Tuesday, we're going to take the first pass all of these scans we have. I'm going to show you how we turn this into a rules-based trading strategy and go back and back test so that we can see which stocks constantly perform when we get these signals. We'll revisit the scan. We'll do that second pass. And we're going to wipe out a lot of what we looked at today. And then Wednesday, we're going to take one of those trades, what we like to call the best of the best. We're going to show you exactly what we're looking for it to do, placing the order, placing the exit order, and then sitting back and watching what happens. So that's the plan here for the next 3 days. Before we get into any scans, you guys were with me last week. Remember, we talked about building a stock list. And more importantly, if you're interested in using my stock list, let's just get right to it. If you're interested in using the stock list that we use, that we start to use for things like our trend trading strategy and quantum scripts, then this is the best way to do it, guys. There are thousands of stocks out there, right? Let's narrow it down to just a couple hundred. We can do that by going to Google and clicking on and typing in penny pilot list. Now, if you type in the words penny pilot list and then hit search, you're going to get about 23 million different results. I'm only interested in the one that says options penny program MEAX. All right, you're going to click on that. That's going to take you to the MEAX website. From there, you're going to have the ability to download that list from MEAX, and it's going to give you all of the optional stocks that trade inside that 5-cent bid-ask range. That narrows you down to less than 10% of all optional stocks. That's what we want to use, all right? That's what we want to use. Now, I always like to start off, Eric, by telling people that we are rules-based traders, right? We don't trade on hype. We don't trade on a lot of the stuff out there, meme stocks, emotion, fear, greed. We're not throwing darts at a wall. We actually are using what we call rules-based patterns. Rules-based patterns are a pattern that works over and over again. Doesn't win all the time, but we like to see consistency. Once we spot a rules-based pattern, then we'll create that acceptable trade. Many, many times we're going in and taking options trades. Sometimes it's just calls or puts. Sometimes it's spreads, depending on the volatility of the market and, of course, the cost of those option trades. And then finally, what we do is we plan, execute, and manage. And that doesn't mean just putting the trade on and walking away. It means putting the trade on and having your profit stops and even your stops in place, all right? So you can walk away from the computer and let the market do what it's going to do. So several of you in here know, if you're Optionetics students or longtime Optionetics students, then you know my partner, all right, who passed away years ago. His name is George Fontanills. This was my mentor, and he taught me. There he is, and there I am with a lot more hair in my head. And so George taught me really the beginnings of trading patterns and trading rules-based patterns. And one of his favorite patterns back in the 90s was just taking a look at, because he said, there's so many different indicators out there. There's so many different ways to trade this market. Sometimes the simplest is the best. And so what he used to do is take a simple moving average. And he said, start with something that's easy to understand. So we'd start with a simple moving average. And so what is a simple moving average? It's an average of numbers. You take numbers, you then sum those numbers, you add them all up together and divide by the number of numbers. You get an average. A moving average is just taking the same group of numbers that are the most recent and putting that equation together and actually creating a moving average of numbers. We apply that to the stock market. So what we look at is, again, what is a moving average crossover? It's just two moving averages of the same length. That's the first thing we do, is we actually take two different moving averages across one asset. And what happens is that the shorter term moving average is going to move faster than the longer term because you're using less data. It's more reactive to the markets. And as the markets gyrate up and down, these two lines cross and they can actually create bullish and bearish opportunities. Now, what kind of moving averages are out there that most people use? Most people investors use a 50 and a 200-day moving average. And that's called, when the 50 crosses above the 200, that's called the golden cross. When the 50 crosses below the 200, that's called the death cross. Many people that are out there, including those of you watching this, have heard of these. They're great, but they're not trader great. They're investor great. What we need is something a little smaller. So what George used to use was something called a 10 and a 30. And the 10-30 moving average was taking that 10-day and that 30-day simple moving average, not exponential, simple, keep it simple. It's the close of each day, the close of the last 10 days, the close of the last 30 days. When the 10-day moving average crosses above the 30, that's a bullish opportunity. When the 10 crosses below 30, that's a bearish opportunity. These are much smaller than a 50-200. That way you're going to get more signals. But you still don't get tons of signals with these. You get good signals. What we're going to do is we're going to turn that into great signals with quantum scripts. But for today, let's just take a look at the foundations. This, by the way, is the first 2 lines of code that we use in quantum scripts, which is a lot more than this. But we took the foundationals from my mentor, and we made that the first 2 lines of code. And so what do these 2 indicators look like on a chart? Now, you can put this on several different charts, and it would look something like this. I blew this up to show you that if we're taking a look at, for instance, the 10 and the 30, and you see them here, all right, the 10 is going to be more consistent with this purple line because it's hugging the market more. The 30 is going to be a little bit stretched out farther because you're using 30 days worth of data. And notice here, the 10 crossed above the 30 with this particular stock that was trading just below 350. And it ran up, and the stock went as high as 950 before it started to cycle back. The crossover occurred just below 750, and we dropped back down again. You can see bullish cross, bearish cross, bullish cross. Now, here's the thing. It works great, Eric, it works great on stocks that are that move around a lot. And what are we in right now? What kind of an environment are we in, folks? We're in an environment that's moving around a lot. Now, I want to share with you the same setup. Take a look at this. This is the 50 and the 200 day. Notice that the 50 stays above the 200 day during the entire time frame that the stock is moving. And you've got no signals. Well, you have a bullish signal because it happens somewhere way back beyond the left-hand side of the screen. And the signal's still going past the right-hand side. But when we break this down and make it a 1030, look what ends up happening. Now we've got something that's a little bit more tradable. In fact, you see 3 signals on the screen where you saw 0 on the 50-200. So why the 1030? Well, the 1030 seems to work more for traders, and you're talking about something that has 10 days, crossing above 30 days. It seems to work pretty well where you get about, when in a stock that's moving around a lot, you're getting about 3 to 4 signals a year per stock, right? 4 signals per year. Anything more than that, and you're getting a little choppy. But we see about, I'd say about 3-4 signals a year on a stock. If it's less, you're making more money. If it's more, you're not. And the reason why is because this is a trend trading system. So very, very easy to understand. You know, again, we're buying when the 10 crosses above the 30. Now, what about when we come up here? All right, what happens here? We get out, if we're going to follow the rules exactly, we're going to get out at when the crossover occurs to the downside, when that 10 crosses below the 30. But we could also take a short signal here, right? Because this is where it works in both bullish and bearish markets. Right, so it works in bearish markets because you get the crossover to the downside. Now, this also works in stocks. It works in ETFs. It works in commodities. Okay, so these are some things that I want to share with you when it comes to looking at both. Now, I've got some trades we can look at, but I want to share with you before we even get into the trades. I want to share with you, let's go ahead and let me bring up a brand new chart right here on my software. And I'm going to share with you very quickly, let's take a look at a chart. I want to show you where this is working really good right now. All right, let's jump back 200 days. Let's take a look at the Qs, QQQ, because the NASDAQ's been running around quite a bit. Now, what I'm going to do is, you see a chart of the Qs, and then you see the implied volatility chart. I'm going to get rid of that. All right. This week, we're talking about direction. So I'm actually going to turn on Notice what I've got here. And I'm turning on the simple moving average. We're going to look at the 30 and the long. The 30 is the long and the 10 is the short. So let's go ahead and update that. I want you to see it on the cues. All right, so got a lot of information here, and I want to really kind of break this out. In fact, what I'm going to do is, instead of the 200-day moving average, or the last 200 days, let's look at the last 100 days, because that opens up the chart a little bit more. Look what's been happening since April. Remember, we got the highs in April. We had that move up. That was bullish for the Qs. Well, when did the Qs decide it was time to go bearish? Well, it wasn't at the tippy top of April. That doesn't happen, folks, because these are lagging indicators. The crossover occurred right around 340, let's call it 348. And that actually occurred around the 20th of April. Now, notice what happened is that took us down, took us all the way down here where we got a bullish cross. And we went from 348 down to around, I want to say probably about 308. So there was a good 40 points of profit that could be made on the Qs to the downside. Now, you got a little choppy here because we had a signal to go bullish followed by a signal to go bearish, all right? And so we got a bullish signal, got a bearish signal, got a bullish signal. That bullish signal here that happened in July was good because it took us from around the 290 area up to where we are right now. But it's starting to roll over again. So when I see the Qs, even though the Qs have made this move down, we're getting a move here where that 10-day is starting to roll over and the 30-day is still climbing. These two are going to come together soon. And we're going to see that bearish cross where the 10 is going to cross below the 30. And that's going to tell us that we're bearish on the Qs. So right now, I'm still bullish on the Qs via this particular trading strategy. But it looks like we might be changing our tune here. Right? So this is a real-time look at what this is actually doing. Now let's talk about stocks for a moment. Because if I take a look at those penny pilot stocks, add those penny stocks in, those weekly stocks in, what kind of stocks are we getting right now? All right, so take a look at the left hand. I'm actually going to blow this up, Eric. You should be able to see this, right?
Yeah, that looks good.
At the beginning.
Looks great.
All right. Take a look at all these. Now, I'm going to show you, these are bears. The first three are bears. I got a bull right now on the gold miners. All right. Then we go through bear. There's Lennar. There's Marathon Patent. There's some golds that are bearish. Come along. Here's Pinduoduo. Pinduoduo is a bull, actually. Then I got CME Group in here. Overstock.com. These are all bearish opportunities that just flipped. Amgen, Whirlpool, 3M, Under Armour, Corning, Adobe, Ralph Lauren, Citigroup. I mean, these are all bearish as of the 10 is crossed below the 30. Let's take a look at some of these real quick. So I'm going to blow this back up, but you'll be able to see the chart. All right, let's pop up back. Let's start with Robinhood. All right, you take a look at Robinhood markets. And I'm going to kind of cruise in here right now. Here was a bullish. This is where the 10 crossed above the 30. Here is the bearish. Remember, Robinhood started to actually climb higher because of they're talking about everything from their interest rates are going higher. They pay some of the highest interest rate on cash. But they're trying to get more people to jump back in and use their Robinhood accounts again. Well, that news is kind of passed. It looks like they had a little bit of a brief drop down, consolidation. And it looks like we're getting a bearish sell signal on Robinhood. So that's one, right? Now, I'm not bringing these up in any order, folks. I'm just showing you examples because, again, this is the first pass. We talked about this last week. You know, when you invite everybody out for spring training or for tryouts on any sport, there has to be a cut. Look how many of these we had, Eric. There were 63 stocks out of the, 300 and so that are penny. I mean, there's a good bunch. There's over 20% of the stocks just got signals on Friday. So, as we're going through and looking at these, here's overstock.com. Now, overstock.com is an interesting chart because it dropped from 55 down here into the 30s and then just started wiggling sideways. And it's been hitting this support down at 25. If this thing goes below 25, this is going to look really good. But look what's happened here. The buy signal, latest buy signal, came just above the sell signal. So it tried to get up there, didn't do anything, then broke back down, and now the sell signal's coming in. This is a bearish opportunity, right? Let's continue on down. Let's take a look and see. UAL. All right, so airlines. So I thought airlines were full, that the middle seats were not open anymore, that they're overselling, that there's not enough flights to handle the passengers. Yes, that may be. And when we went from March into May, we had that drop down, we had a pullback. But again, look what's happening now. We're kind of hitting some support levels close to where we are right now, getting more sell signals and buy signals. Whirlpool. All right. Whirlpool has had a downtrend, and you're getting buy signals in a downtrend. But here's a sell that happened here at 180, and now we got another sell that's happening right now at around 160, and moving lower. So again, the question that I'm looking at is, I look at these. Let's take a look at a tech, Eric. Adobe.
All right.
Adobe has come out of again. They've got their earnings coming up here soon. What's happened with Adobe? Lower highs. Had a little bit of a pop up here just recently, but we're getting into some support levels here as it's been selling down from the 440 to the 380 level. Just got another sell here at 380. This came on Friday, and so you can see that sell signal in place, ready to go. The question that a lot of you got to be asking is, well, first of all, why did he get so many signals all of a sudden? Well, because the entire market is starting to roll over. And typically what ends up happening is we see a lot of these stocks, and these are popular stocks here. I mentioned Ralph Lauren. Let's take a look at Ralph Lauren on the list. There's Ralph Lauren. Again, Ralph Lauren was a $130 stock, but it hit a lower low, lower high, lower low, lower high, same low, and then we started consolidating in here. There's a buying opportunity that popped in July. Didn't make any money. It flipped to the sell side today, or really based on Friday's data, flipped to the sell side. So it's a sell at 95. Okay. So what's funny is that, Eric, I don't like to play the why game. All right. Because listen, to trade patterns correctly, you have to verify the pattern, trade the pattern. You don't ask, why is it down here? That's like, me going out during the weekend. And, my wife and I went out this weekend. We went out, we looked around, checking out the malls, because the malls have been empty, but they're not empty anymore. In fact, there's places like Crumble Cookie. This is a company that sells $5 cookies. Cookies $5 and higher. That's the cheapest price of the cookie. That thing had a line going out the door. This was Saturday night. Line going out the door. Bars, lines going out the door. Restaurants, high-end restaurants, still packed, which tells me we're not done with rate cuts yet. We're not done inflicting pain into the stock market, which will then become pain in the economy, right? Still needs to be some rate hikes that have to happen. Quantum and this particular trend trading strategy is ahead of what's going on right now, and it's showing us a lot of sell signals right now in these markets. Let's look at Citigroup. All right. Last one we'll talk about here, Citigroup. So you can see Citigroup, again, I thought financial companies were supposed to go up when interest rates go up. And they do, but we're seeing that massive move to the downside. This could be because, there's a lot more people working at Citigroup. There's a lot more people working at these financial institutions than maybe need to be. So there's going to be cutbacks that occur as well. Again, lower highs, lower lows, pulled back. Here's the same high resistance level, rollover. This looks like a really good sell opportunity as well. But is it the best one? No. Folks, these are all first pass scans. There are 63 first pass scans on here, right? So what I want to do is I want to take a look at all 63 of these, and I want to tweak this a little bit, okay? And what I'm talking about is I'm talking about tweaking this to where we can come into the best of the best trades. Now, what can we do? Well, we can tweak 63 of these, and what we can do is with our quantum bear trades, we can tweak these down to where, check this out, Eric. All right. Instead of, if you look at trend trading strategies, folks, if you're going to let your profits run, you're going to cut your losses. The Turtles had a great trend trading strategy. It worked really well, but they were only right about 3 out of 10 times. That means 7 out of 10 trades were losers. Okay? But if you want to get to the point where you're seeing this kind of move, 92% right now of the quantum stocks that popped up on Friday are actually already on the run, moving in the right direction. Okay? This is just in the last day. So what I want to do is I want to tweak those 63 stocks. I want to strip away the ones that just aren't doing anything. Okay? That they're back test. Yeah, but there's a lot of bears out there. But which ones have performed? Just because I could throw a football at somebody, they can catch a pass in the end zone once, doesn't mean they did it 3 or 4 or 5 times before. They may have dropped the ball 9 out of 10 times. Okay? It's been said that even a broken clock is going to be right twice a day. I want to look for stocks that have been right again and again and again on the strategy. And that's where we take what we've been doing. All right, showing you just the strategy right now, showing you just the rules, right? And the rules are the foundational rules. Just the first 2 lines of code are always shared with you today to give you an idea of the foundation of trend trades. So what do trend trading strategies do? Well, when you're right, you're really right, right? Just ask the folks that are part of our Quantum Data Profits membership, because we got 11 in a row we've hit now. We've got, and we're going to talk about these for those of you that are going to be joining us at 1 o'clock today. Joe and I are going to be talking about these 11 winners. We're going to talk about our open positions. We're going to talk about that quadruple that has occurred as of this morning and what we're doing with it. Okay? But it all revolves around taking this list of 63 stocks that we have right here. This list, here it is, 63 stocks. And saying goodbye to at least half of them. Thank you very much for coming. We'll see you on the next signal. We'll see if you're starting to build, if you're starting to catch a few more passes, because we want to look at the stocks that have caught pass after pass after pass, that are win after win after win, and only then will we then take the best of the best and turn them into option trades where we could take a stock, that's a $100, $200 stock. And instead of buying the stock if we're bullish, instead of shorting the stock if we're bearish, we're looking at buying call options if we're bullish. We're looking at buying put options if we're bearish. And we're looking at trading spreads to get those trades down to a $500 or less trade. So what we're going to be doing again is that if you're going to come out and join me tomorrow, we're going to take a look at this list. We're going to cut this list down. We're going to get rid of half of these folks and rescan for what we like to call quantum trades. So again, folks, if you're with me as a Quantum Data member, then join us at 1 o'clock. We're going to get into this in a little bit more detail. If you want to become a QDP member, check out the links on the screen or call Gabe. Phone numbers on the screen as well for our best ever, what I like to call bear market pricing. Thank you all very much. I'll see you again same time tomorrow. We'll pick it up then. Bye now.